Hi guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. So guys, I'm going to give you some gold every day. I'm going to let you know which currency pairs I'm looking to trade and which direction. And I'm also going to let you know which news that you must be aware of. So let's take a look at the chart and what I'm potentially going to trade today. Traders, it's Friday. We made it to the end of the week. Well done us. I hope you've had a profitable week, guys. I have. Pat myself on the back. I've had a profitable week. I hope you have too. Please leave a comment. Let me know how your week's gone. Today is Friday the 8th of July, and yesterday Boris Johnson got the sack. Who would have thunk it? Yeah, who cares? Politics. They're all idiots. Right guys, so as usual, we're going to start with yesterday's recap. We're going to look at today's potential trades, and we're also going to look at the news for today as well, guys. All right, so let's start with yesterday's trades, of which we made profit. Let's explain how. So guys, first one from yesterday was this. This was the pound against the Canadian dollar, and we were looking to buy this pair. Okay, for the following reasons. You need reasons to buy or sell. So these are my reasons. Okay, so it wasn't a downtrend. Lower lows, lower highs, lower lows, then bang. These highs were broken. Yeah, we had new higher highs. That is the definition of an upward structure, an uptrend. Then price come hurtling back down to test these lows, guys. Okay, yeah, and these lows have keep being tested. Yeah, tested, bounced, tested, bounced, tested, bounced. Okay, and we were just trying to take profit off of one of these bounces. Okay, and then just to take price up to this blue line here, guys, or even this blue line here. Okay, and as you can see, price this morning is still going up. Okay, and also yesterday we made some profit, guys. All right, but yeah, we were looking to buy because of the bounce off of this support here, guys. Okay, so yeah, looking for buys. Let's look at H1 to see how we could get in on this trade. Okay, so there were many candles that we could have got in. Okay, so there was this candle. Yeah, buyers are in control. There was this candle. Yeah, buyers are in control. There was this candle. Okay. You had a plethora, good word. You had a plethora of candles to get in long. Yeah, all of these candles here, guys, tell me buyers are in control. Okay. So let me explain what candle I got into and how I traded it. Okay, so I got in on this candle. Okay, yeah, and the target was to take it up to here, this area here, guys. All right, so let's explain what happened, guys. So because of this candle, guys, I had to get a retrace. Okay, and also where to put your stop. All right, so let's just say you enter on the close of this candle. Okay, you could put your stop here. Okay, directly below the last your entry candle, your bullish candlestick pattern. You can put your stop here. Okay, you can also look at the last H1 swing low and put your stop below that. Okay, or to be more conservative, you can put your stop below the gray line. Okay, so these are all reasonable places to put your stop. Yeah, they all make sense. So just below the entry candle, below the last H1 swing low, or below the grey zone that we plotted. Okay, so all of these are good places to put your stop, but obviously, yeah, you need to leave room for some wiggle space, yeah, for this pair. And what I did, guys, is I tend to put my stop below the last swing low or high on the H1. Okay, so for me, this was the last swing low, and because it's pound Canadian dollar, which can tear your face off in the blink of an eye, yeah, it can go 100 pips in a few minutes, yeah, compared to the Aussie dollar, New Zealand dollar, which can go 10 pips in 3 months. Yeah, you have to understand the movement of the pair you're trading. Okay, so for example, guys, I will put, because it's pound Canadian dollar, I will go 10 pips below the last swing low. Okay, so I'll put it at about 16, which is about here. Okay, guys, so this last low, as you can see, was around 26. Okay, and I will put my stop 10 pips below that because it's the pound Canadian dollar. If it was the Aussie dollar, New Zealand dollar, I would probably put it 5 pips below the last swing low on the H1 or the swing high on the H1. Okay, so obviously, guys, your stop positioning is very important. Yeah, you don't want it to be massive, where where you're risking a lot of money and your reward has to be bigger, but you also have to give the trade wiggle room. Okay, so my trade was sorry, not my trade, my stop was around here, guys. Okay, it was around 5,516. Okay, then because your stop's here at around 516, you then have to bear in mind your reward. Okay, so if I entered here, yeah, put my stop here, and my target was here, then this is my reward, and then this is my risk. It's very difficult to draw with a mouse. I must make this clear. Okay, so this is your risk. Yeah, here, this is your risk. This is your reward. Okay, so for me, the risk is too big for the reward. Okay, therefore, you cannot enter on that candle, on the close of that candle. You have to wait for a retrace. Okay, so I actually got in at 5,550. I got in around here. Okay, so let me just show you that again, guys. So this was my entry candle here. I waited for a retrace down to 5,550, which was about here, put my stop at 16, and then took price up to this last swing H1 high here. Okay, so now this is my risk, and this here, let's pick an area here, this is my reward. Okay, then the trade makes sense. All right, I got a little bit under a risk to reward of 1:2. Okay, because I waited for a slight retrace, guys. Okay, so in the back of your mind, guys, must always be, how much am I risking? How much is my reward? How much am I risking? How much is my reward? How much am I risking? How much is my reward? That has to go on in this brain constantly. Okay, the trade has to be worth it. Okay, guys, sorry, I digress. I'm waffling this morning. I apologize. All right, but yeah, so I got in. This was my entry candle. I had to wait for a retrace down to 550 roughly to make the trade worthwhile. My stop was here. My exit, my target was here, guys. Okay, so I closed 80% here, and I'm still in this trade for 20%. I am a happy trader. Yeah, look at that. It's flying up, guys. Okay, so guys, let me know which candle you got in, and I hope you got into this trade. It was a profitable trade, guys. All right, so yeah, a little bit there on how to place your stop. All right, profitable trade, pound Canadian dollar. Well done, us. Next trade was this. It was the euro against the US dollar, and we were looking to short this pair for obvious reasons. You don't need to be a brain surgeon. Yeah, so we were shorting this pair. Price was in a downtrend, lower lows, lower highs, lower lows. This very important level here was broken. As you can see, it reacted here, reacted here, reacted here. Okay, but it broke. Okay, and let me zoom in a bit, guys. Okay, and then we had a couple of bearish candles. So our entry candle was this. And we were just trying to wait for a retrace up into our grey zone, which didn't quite happen, and then to take price back down to this blue line, which did happen. But let's see if we had a trade, guys. We didn't. I didn't. Maybe you did. Okay, let's look at H1. So, yeah, for this pair, guys, I was waiting for a retrace. Yeah, I had to have a retrace up into this grey zone for me. Because if you remember rightly, guys, our higher time frame target was also the last H1 low and the last daily low of the candle. All right, so for me, we had to wait for a retrace into this grey zone. We didn't get it, but maybe some of you were feeling a bit aggressive and you took this candle. Yeah, that would be perfectly reasonable. Yeah, if you got in on this candle, guys, yeah, entered here, put your stop here, yeah, and took price back down to this blue line, you would have got a risk to reward of roughly 1:1. Yeah, maybe you traded that, guys. If you did, well done, you made money. I didn't, guys. Okay, I didn't trade this pair. I wanted more of a retrace because the higher time frame target was so close. But again, guys, let me know. I didn't trade it. Maybe you did. Okay, guys, so that was the recap from yesterday. So we made money again. We made money. That's what it's all about. Right, guys, recap finished. Let's look at today's trades now. Guys, I hope you enjoyed yesterday's recap. We also spoke about placing your stop, which is obviously very important. But also check out my tutorial, guys. We don't always need to use a stop order. We can use a buy or sell order. Okay, so check out that tutorial. I'm sure it will be of use to you. But guys, if you did enjoy the recap, then please subscribe to the channel, smash the notification, and you'll receive this daily analysis every single day. But not Saturday and Sunday. I will be out. Right, guys, so trades for today, guys, for Friday the 8th of July, we've got 4, that's right, 4 trades for today. So the first one is this, the Canadian dollar against the Swiss franc. Okay, guys, so why are we buying this? We're trying to buy it, we're trying to long it. So, as you can see, guys, price was clearly in a downtrend, yeah, lower lows, lower highs, lower lows. And then it's gone, I just don't know what to do with myself, okay? Hasn't known what to do with itself. And then these last lower highs here were broken with this very bullish candle, okay? So we was in a downtrend, but then this high here, these highs here were broken with yesterday's very bullish candle. Okay, so we now got higher highs. So structure has changed. Yeah, we're in a uptrend now. Okay, and the idea is for price to retrace into this grey zone. That's exactly where it is already, and then to take price back up to this blue line, this psychological level of 7,600. Okay, guys. So yeah, we're going to buy this pair. Let's look at H1 to see how we can get in on this pair. Okay, guys. So yeah, price has already retraced into our grey zone, okay, but now, guys, we want to see, yeah, in this grey zone we want to see a bullish candlestick pattern. That is always our trigger to enter, and that is also a fail safe. Yeah, it stops us getting into bad trades. Okay, so must have a candlestick pattern. So a bullish candlestick pattern, we enter the trade, we take price back up to this last H1 high, close 80%, and then leave 20% to run, guys. Okay? All right, and we've only got the one grey zone. So, yeah, CAD, CHF, CAD, Swiss franc, we're buying today, guys. Buy this pair. All right, that's the first trade idea. Second trade idea is this is the pound against the Swiss franc. So we're seeing a little bit of Swiss franc weakness, okay? So we are looking to buy this pair as well. So price was clearly in a downtrend. Yeah, lower lows, lower highs, lower lows, lower highs. Didn't create a lower low. Okay, this makes us think. We think it may be changing. The trend may change. And then sure enough, this last high here, yeah, was broken with this bullish candle. Okay, let me zoom in a little bit, guys, so you can see that a bit clearer. Yeah, so price was coming down, lower lows, lower high, didn't create a lower low. Yeah, and then this high here was taken out, just about taken out with this bullish candle. Okay, so now we have higher highs. So the idea is just to take price up to this blue line, this psychological level of around, around 1,800. Okay. So guys, yeah, we're looking to buy this pair as well. Let's look at H1 for our entry, our execution. So we want to see price come back down to this grey zone, yeah, then which testing these lows and these last highs. Okay. Again, guys, this is a very, 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 very common pattern in the market. What was once resistance, yeah, price come down here, price come up here, yeah, what was once resistance, when it breaks, then becomes support. Okay, this is a very common pattern in the market. Okay, so we want to see price retrace into this grey zone. We want to see a bullish candlestick pattern. We enter, we take price back up to these last H1 highs, close 80%, leave 20% to run. All right, so pound against the Swiss franc, we're looking to buy this pair as well. Third trade idea is this. This is the euro against the Aussie dollar. Okay, so let me explain why. Why? We always need a why. Why am I taking this trade? You have to have a why. You have to have reasons to take a trade. And my reasons are this. So price was in an uptrend, higher highs, higher lows, higher highs, higher lows, didn't create a higher high. Yeah, remember guys, when we don't get a higher high or lower low, we're thinking, maybe trend could change. Sure enough, it changes, yeah? These lows here are taken out, and now we have lower lows. Price structure is in a downtrend, okay? And we had a very bearish candle form. So we're in a downtrend, we have a very bearish daily candle, and we have room to move into, okay? Down to this blue line, this psychological level of 4,800. Yeah, reasons to trade, that is them. Okay, so yeah, we're looking to short this pair, guys. Let's look at H1. And then when we look at the H1, guys, I'm looking for criteria to enter. So my day chart gives me reasons for my direction. Am I buying? Am I selling? Then my H1 chart gives me the criteria I need to trade. Okay? So what we want to see, guys, is price retrace up into this grey zone. Okay? Yeah, which corresponds with this last highs and these lows here. All right? Price come up into here. We see a bearish candlestick pattern form. We enter. We take price back down to these lows. Okay, close 80% and then leave 20% to run down to our higher time frame target. Okay, so euro Aussie dollar short, and this is our criteria. Next trade, there's more, guys. Yeah, the markets feel a bit more loose. Yeah, feel a bit more tradable. This one is the euro against the New Zealand dollar, and we're also looking to short this pair as well. Obviously, euro Aussie dollar, euro New Zealand are very correlated. Trade the one that gives you the best setup. Okay, so why are we shorting this? Remember, the day chart is your why. Why are you shorting? Why are you buying? So we're shorting this market, and this is why. So price was in an uptrend. Higher highs, higher lows, higher highs, higher lows. Didn't create a higher high. That's when we start thinking, could trend be changing? And then sure enough, pow, yeah, it's been dropping and broke these lows here. Okay, so price is in a downtrend. And we see a very bearish candle. That's a strong bearish candle, guys. All right, so all we want to do is price retrace into one of our grey zones, and then we can take it back down to this blue line, this psychological level of 6,400, which also corresponds with these last lows over here. Okay, so that's the direction. Let's look at H1 to see how we can enter this pair. Okay, so, okay, guys, we've got a couple of grey zones. So price is already in one of the grey zones, as you can see. But yeah, what we want to see in here, guys, is a bearish candlestick pattern. All right, if we do, we can get into the trade. We probably can't take price back down to these last H1 lows because they're so close. All right, so you'll probably have to let the trade run a bit to get your 1:1 risk to reward and close 80%. Okay, so let it come down, close 80%, and then let 20% run down to the higher time frame target. Okay, if that doesn't happen, price could retrace back up to here. Yeah, back up to this area here. Okay, if it does, great, we get more value for money. And then when it does, we want to see a bearish candlestick pattern form, get into the trade, take it back down to the last H1 lows, close 80%, and then leave 20% to run. Okay, guys, so they're the 4 trade ideas for today. I hope you've enjoyed them. Yeah, so guys, we will now look at the crazy world of news. Guys, if you're enjoying this daily morning analysis, I hope you are, then please subscribe to the channel and smash that notification button. That way you'll receive an alert every single day, but not Saturday or Sunday. Right, okay, so news for today for Friday the 8th of July. So nothing overnight, guys. Got some yen news, but no 3-star ratings. The first important news that we're interested in is this, guys. At 12:55 London GMT, coming out of the Euro, we've got the head of the European Central Bank, Lagarde, is speaking. When she speaks, she can move the Euro pairs, guys. All right, so must be aware of that. We carry on down, guys. We've got the big news of today. This is the big daddy news. At 1:30, coming out of the US, we've got non-farm payrolls. Okay, so this can really move any US dollar pair. Okay, and at the same time, we've got the unemployment rate. Okay, so with non-farm payrolls and the unemployment rate, this can really move the US dollar pairs, guys. All right, so must be aware of this news. At the same time, coming out of Canada, you've got employment change as well. So this is another 3-star rating. This could really move any Canadian dollar pair. So at 1:30, guys, imagine you're in the US dollar, Canadian dollar. Yeah, that is going to be volatile. You need to be aware of that news, guys. Okay, and then if we carry on down, guys, as you can see, no other news that we're interested in for the rest of the day. Okay. So guys, I hope you've enjoyed the vid. If you have, please subscribe, like, and share with your friends. I hope you have a wonderful trading day, guys, and a great weekend. And I'll catch up with you on Monday. See you later.